Okay, so you've probably heard grown-ups talking about the stock market. It sounds super complicated, right? Like something only people in fancy suits with briefcases understand. But honestly, it's not as crazy as it sounds. Imagine a giant, enormous farmer's market. Apples, carrots, they're selling tiny pieces of huge companies. Think about the company that makes your favorite video game console or the place your family gets its pizza on Friday nights. The stock market is just a big, organized place where you can buy a little slice of those companies. It's like a massive club where everyone is trading ownership. This marketplace isn't a physical building you can just walk into, like the mall. It's mostly online now, powered by a bunch of computers all connected together. It's a bit like an online video game where millions of people are all logged in at once, making trades. They decide, hey, I want to buy a piece of that company. I think I'll sell my piece now. All these decisions happen super fast, all day long. So why would anyone want to buy a tiny, invisible piece of some company? It's not like you can take your piece of the pizza company and demand a free slice whenever you want. That would be awesome, but it doesn't work that way. The main reason people invest their money in the stock market is one simple goal: to make their money grow. Think of it like planting a money seed. You put a little bit of money into the ground by buying a piece of a company. Over time, with a little sunshine and water, it grows into a big money tree. It's a way to make your money work for you, even while you're sleeping or at school. People invest for all sorts of big life goals: college education, new car, big family vacation, retirement, that super-duper long vacation after work. Investing is a long-term game, not about getting rich tomorrow. Put money away and let it slowly build up over many years. Small pile of cash turning into a much bigger pile. A plan for the future. It can also be kind of exciting. Let's really break this down. Show a pizza cut into many tiny slices. One slice priced at $10. When you buy a piece of a company on the stock market, that piece is called a share or a stock. They mean the same thing. If a giant pizza company, Mega Pizza Inc., decides to sell 1 million tiny pieces of itself, then it has 1 million shares available. If you buy one of those shares, you are now a shareholder. You don't get to be the boss or tell them to add more pepperoni. But you are officially a part owner. It's like you own one single brick in their giant headquarters building. It's your brick. So how do you actually make money from owning this tiny brick? There are two main ways. The first and most common way is that the price of your share goes up. Let's say you bought your Mega Pizza Inc. share for $10. Business is booming. Everyone loves their new cheesy stuffed crust pizza, and they open 100 new restaurants. Because the company is doing so well, more people want to own a piece of it. This demand drives the price up. A few years later, your share might be worth $15. If you sell it, you get $15 back, making a $5 profit. The second way to make money is something called a dividend. This is my favorite part. A dividend is when a company has made so much profit that it decides to share some of it directly with its owners, the shareholders. It's like a thank you gift for being an investor. Mega Pizza Inc. might decide to give every shareholder 25 cents for every share they own. It might not sound like a lot, but it's like the company is handing you a little bit of cash just for being a part owner. Not all companies pay dividends, but the ones that do are basically giving you a bonus on top of any money you might make from the share price going up. Think about a company like the one that makes those building bricks you can snap together. That's a real company you can buy shares of. Imagine buying a share of that company. Every time you see a kid playing with those bricks or a new movie about them comes out, you can think, hey, I own a tiny part of that. You start to see how all these businesses are connected and how their success or failure can actually affect your own savings. It's a pretty cool feeling to know you have a stake in the game, even if it's a very, very small one. Ultimately, leaving money in a piggy bank isn't the best plan. Prices rise over time. A $1 candy might cost $2 in a few years. That's inflation. Money just sitting loses buying power. Investing gives your money a chance to grow faster than prices. Protects your future self. Now, it's super important to know that the stock market isn't a magical money machine that only goes up. It's more like a roller coaster. Thrilling climbs, scary drops. The chance of making money is the reward. The chance of losing money is the risk. Be prepared for both if you're going to get on the ride. Sometimes a company might not do as well as people hoped. Mega Pizza Inc. releases a new broccoli crust pizza nobody liked. Yuck. People get worried and start selling shares. Lots want to sell, few want to buy. Prices fall. Your $10 share drops to $8. If you sell then, you've lost $2. This is the risky part of investing. That's why you hear about market crashes. Many stocks lose value at once. It's normal, but it never feels good when it happens. The key is, don't panic. Experienced investors know the market has ups and downs. They don't sell everything the second things look bad. Over long periods, the market tends to go up. Zoom in, scary dips. Zoom out, the track climbs. The secret is patience. Getting started with investing can feel like trying to learn a whole new language. Getting started with investing can feel like trying to learn a whole new language. There are so many weird words and complicated-looking charts, but you don't need to be an expert to begin. The most important thing is to just start small and focus on learning as you go. You wouldn't try to lift a 300-pound weight on your first day at the gym, right? You'd start with something light, like 5 pounds. It's the exact same idea with investing. You can start with a very small amount of money, maybe just enough to buy 1 share or 2 shares of a company you believe in. The goal at the beginning isn't to make $1 million. The goal is to learn how it all works. By owning a real share, even a tiny one, you start to understand things in a way you never could by just reading about them. You'll see the price go up and down, you'll get company reports, you might even get a small dividend payment. It's like having a front row seat to the world of business. You'll learn what it feels like when the market is up and when it's down. Experience beats early profits. A great way to start is by looking at the companies you already know and use in your daily life. What's your favorite brand of cereal? What company made your phone? What streaming service do you use to watch movies? These are all real companies with stocks you can buy. Researching a company you're already familiar with makes the process a lot more fun and a lot less intimidating. You can look up what they're planning for the future and decide if they have a good plan for growth. You become a detective for your own money. Remember, every single expert investor was a beginner once. Nobody is born knowing how the stock market works. They all started with their first share-made mistakes and learned from them over time. The journey of investing is a marathon, not a sprint. It's about building good habits, being patient, and slowly growing your knowledge and your money over many years. So don't be afraid to take that first small step. You might be surprised at how much you learn and how much fun you have along the way. The sooner you start planting those money seeds, the more time they have to grow. It's a place full of opportunity, and it's not as scary as it looks from the outside, I promise.